All right, guys. Welcome to the webinar. This is Navin Prithyani, analyst from urbanforex.com and forexwatchers.com. Thank you, FX Street, for having me here today. Today we're going to be doing pretty much a part 2/revision of identifying the Forex movement. I think we also have a pretty big webinar of a 2 or 3 hour series coming up in October as well. So, keep a lookout for that as well. It's going to be an exclusive webinar at FX Street. So how many of you guys have been to my webinars before at FX Street? Okay. And if you guys are new, just type in new so I can know how many new people are here and how many are returning. Okay. Got Paul, Jordan, Mike. Okay, we got a bunch of people new in here. Okay. Boyke, I've seen you before, returning. Okay, great. Well, welcome. FX Street's a great place for learning stuff as well. So let's get started here. Now, we're going to touch base on the information about identifying market direction. Okay? Now, what happens when it comes to market direction? Okay, let's blow up a chart here and put up a chart that people are used to. Let's say Euro USD. Okay? When people look at market direction, the entire focus goes right here. And they're like, okay, well, it's currently going down, so I want to be only hitting the sell button, or it's currently going up and I only want to be buying. Well, according to this, I'm in a uptrend, so I want to be a buyer. Okay, so the focus goes very, very in a specific spot very close to current market in understanding which direction the markets are headed. Okay. How many of you guys are familiar with how I teach you guys how to identify the flow and the structure of the market? Did I teach you guys here that before? Okay, knowing how the market flows into a certain area and how it dies out. Okay. All right. So we'll touch base a little bit on that as well today. So let's look into this now. If my screen or audio, anything, if any of that stuff lags, just let me know. I am on a foreign connection out from China, so if there's any issues, let me know. I'll slow down. Okay. So first things first, one of the things, everything that I explain in this webinar is for informational and educational purposes only. So these are not trading advices, and please be aware that Forex is risky and be aware of trading disclaimers. Whenever I look at my screen, I want to take advantage of understanding the flow of the market from the left side of my screen all the way to the current market. I don't want to dismiss what has happened in the past. Okay, and these are very, 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 very critical to understand how the market is actually flowing. Now, here's the daily chart. I'm looking from left to right. Now, when you look at this from left to right, what can you see? Okay. The primary thing that I like to do is I like to start drawing circles, at the most extreme areas. Okay, there's an area there, area up there. Okay, where does the market jump out at you? Okay. So now we've reached this area up here. Okay. Let's say up until this area up here. How do you see the markets going? We see the markets going long. Then it does this massive drop. And then from this drop, it does a retracement. And then from the retracement, it drops again. Okay, you might call this a 38% or 50% from a Fibonacci level. It's dropping from there. But what happens as it drops there? It's unable to break its recent low. And it did that earlier as well. Okay. Then it makes this new high. Okay, and it makes a newer low after that. So up until this point, we've had this pennant formation coming in. And then the market breaks through. Okay, this is what we call a false break. It goes straight up north. Everyone's going to be thinking that, hey, I'm going to be going long. For those of you who have concerns about the recording, usually all the webinars that I perform on FX Street are recorded and are available to watch again on fxstreet.com. So that will be available. You can get more details on that from the admins later on. So you can see how the markets blast north from here, providing a false hope of, okay, we need to buy, we need to buy. And then it drops back into the zone, falls below this area, again, getting people to sell. Okay? So we see this whole structure that it's the finding out of where people are actually making their turns. Now, when you look at this, your concern is not where am I breaking out. Your primary concern should be, okay, where did it drop from? Or where did it rise from? So as you get closer to these areas of wherever you've drawn these circles, you want to be very, very careful to not try to go against them. Okay? You want to be very, very careful with those kind of things. So as you get closer to this bottom circle, of course, you want to be in a buy mode because that's where it shot up from. Okay? It stopped this entire downward movement right there. And it went north again. So there's some significance there. So all these areas you want to be very, very careful of. Okay? And that's how you get to find out that, okay, is the market in a range? Are we headed north? Are we headed south? And so on and so forth. So according to the daily chart, we've been in this chop mess for quite some time now. Okay? Okay, can we consider these levels to be interesting for market makers to make business? Of course, because what happens at these levels? Okay, what happens at these levels? Okay, if you look at this area, right, where I've drawn this circle, I'll put a red arrow on there. Okay, let me know when you guys can see the red arrow so I know if it's lagging or not. Yeah, see it? Okay, great. If you look at this red area, considering I'm on a daily chart, look at the amount of time it has spent in this area before the markets have dropped. Now, when you see a market halting and dropping away from that area, the market assumes that this is now the threshold for the new highs. Okay, that is my resistance level. Okay, that perception goes in their head that that's the wall. And if the wall is broken, you want to hit the buy button as quickly as possible. Okay, that's how breakout trading works. And breakout trading is the most dangerous trading, in my personal opinion, out there. It's just like, it's like a kill coming up. So all these buyers start getting in, and what happens? Slams straight down. Okay, you might look at this as a support resistance level. Some of you guys might look at this as a supply and demand level. Hey, whatever it may be. And if you guys are supply and demand traders, if you actually look at this area where it dropped from, where did it drop from? You don't really see anything. Okay, even for support and resistance, there's not really nothing. There's practically nothing there. Okay, but as it goes higher to here, you can see that. So once it goes higher, yeah. But if you go down to a lower time frame, Lucas, you can go down to as many time frames as you want. You'll always find something somewhere, right? So the objective is not to is to see something on the time frame you're at. because you need to determine. Okay, that's another key thing I want to point out to you guys is when you're working with charts. Okay, the way I do it is I stick to two time frames that I want to deal with. A pair that I see that I'm stalking a trade for, and one time frame below, and then that's as far as I will go to see the clearer picture. Okay. If I go any further deep, I'll start seeing more trades that are forming on a smaller scale, and I'll start forgetting my place. Okay, and that's when it gets really, really confusing and messed up, especially if you have 28 pairs you're looking at. So, okay, so let's take a look at another pair. Boyke, did you have a comment? Look for more trending pair. Yes, finding a more trending pair is more ideal. Okay. Here we go. Take a look at this. Because when you actually see these moves, right, you see. Okay, I want to show you guys something neat here. Let me see if I can find you. Okay. When you see a movement like this, right, this move down here, what would you say as a person who likes to look into Fibonacci? What would you say, what kind of retracement this is? What percentage would you say of this whole move is this? Okay, Phil says 38. Okay, some 61, 618. No, not 618. 38. Okay, so 38 seems to be the common number that's coming up here, right? What does that 38 mean to you? Potential area for turn, resistance. Okay. Okay, trend continuation. All right. And you know from all of these what I see the correct answer is trend continuation. Now, when a market retraces, the primary concern for most people is where can I get in? That's the primary concern is like, am I getting in here at 38 or am I getting in here at 50? But the concern never comes in as understanding the strength. If the sellers are so strong, the buyers will have less retracement. If they're getting weaker, your retracement is going to go higher. It's not going to go 30%. It's going to end up being 50, 60, 80. And that tells you how strong your move for the downward movement is. So if you were to end up taking a sell somewhere at the 38 mark, you can expect that the move still probably has some strength left to it. If you're taking a move at a 61.8 area, you can expect the trend is a bit weaker now. Okay, yeah, it's a very it's one of those things like stating the obvious kind of things, but the things that people don't look at it that way. Most people are very concerned about, do I sell now? What about now? What about now? Do I sell? That's the whole concept behind the mentality. Okay, so we still see some strength coming in here. Now, when I look at this on a smaller scale, now this is the big picture, right? Going back to the big picture, smaller picture. So this is the big picture. According to my daily chart, I'm looking at this as somewhere in this thing, I see there is still strength for Aussie dollar to kick back in. Okay. How do I know what it's doing on a smaller time frame? So I'm going to move in one time frame lower. Let me go down to the 4 hours. 1 second. That's 240. Okay. This is the 4 hours now. That's that big circle I drew on the daily. Let me put in some more dates. Okay, give it a second. It's just downloading right now. One moment. Navin, is the TradeStation platform free? No, it's not. You can open an account with them and you can get it for free, or it's $200 US a month. From last one I checked. Okay, so when we're looking at this, you're welcome. When we're looking at this, we see this is the area that it's gone up from, and the big massive drop that we've had comes all the way from the past, right? Now, as this trend has started dying, look at how the trend died. Look at the amount of retracement it did here. 90% retracement. And then what our main concern now is, are we going to have a hard time testing the low? It goes right through it. Fair enough. It goes all the way down till here. It goes all the way down till here. Retraces again. Okay? And now you're like, okay, are we going to have a hard time testing our lows again? It comes all the way back down, and it does struggle here before it starts to go north. This is your first indication. When you get a circle that is higher than your previous circle that you had drawn, that gives you your first indication that we're having a turn. Okay? You're getting these deep retracements coming in, plus you're having an inability to cross your recent lows, gives you a heads up that the trend is now dead. Okay? And that's when you see the buyers starting to kick in. This could mean several reasons. It could mean buyers are coming in with more money, or it could mean sellers are simply just moving away. They're taking profits and they're moving away. Okay? And that's when the buyer flow starts to get in. Okay? So it could have several reasons, but your whole reason behind this is not to find out who's in control. That's not your concern. Your whole concern is, what does this mean to me? Right? So as this goes north, do you trade futures for freaking? This is a futures account, but I'm still trading currencies. So you can see here, as the market still goes strongly north, and look at the way it retraces here. Okay, look at how much further it goes once it retraces like that. This is what, 15% retracement, just by looking at it, and it goes further higher. Okay, let's go further. Goes higher and higher until a point where now we're seeing deeper retracements coming in. Okay, move up. Look at the move degree of pull down. So now you're starting to see these formations start to come in where it's like the sellers are kicking in, or the buyers are stepping aside. Okay, it's one of two. All right. Let's take a look at, let's see, do you guys have a specific pair that you guys like? We can pull up a pair. Navin, looking at the past, is it easy to look at what has happened? How about looking at the present and share your thoughts? Oh, okay. You're saying it is easy to look at what has happened. How about looking at the present and share your thoughts? Okay. So tell me a pair, right? We look at the current market. That's okay. Euro yen? Okay. Euro New Zealand? Okay, we'll look at both. We'll go from Euro yen to Euro New Zealand. Okay, so Euro yen. Let's start off with the daily. The daily is a good way. Let's see here. Okay, let's get rid of all these. Okay. So what do we see in Euro Yen daily here? Do you see the steam of buyers still strong? Look at the strength here. Look at the strength here. Okay. much weaker, right? It's much weaker. Okay? It's even tried to do a complete reversal. Okay? How do we know that? It's because earlier it made a circle here, went higher, did a complete retrace to this area, 90% or so. Following that, it did a lower high, which gives you the first indication once the market turns. Okay, this is what we call a backdoor that looks like the trend is turning around. But we were unable to create lower lows to make a confirmed movement. How does that look? If you did have a lower low, this is how it would look. You would have a channel. Okay, but you need that lower low, which we never had. So it ends up being a triangle. Sorry. It ends up being a triangle. And then it breaks out of it, uses a support on the upper end, and so on and so forth. And it continues. Okay. So current markets. What do you see? What can you guys tell me on the current markets? What comes to your mind when you first see it? Okay. If you don't know, take a guess. What comes to your mind? If you were sitting here and you were looking to trade and you're looking at Euro Yen daily, what comes to your mind first when you see this? I'll blow it up a little bit. Okay. Uptrend, consolidation, taking profits. Okay. Okay. What if I flip the question around? And what would you like the market to do for you to get interested? How about that? Instead of looking at the market and assuming what should be done, what should the market do to get you interested? Okay. Drop like a rock. Break out. Okay. Retouch the high and reject, starting another swing. Higher lows. Too close to recent highs for long. So retrace. Okay. That's very good, Phil. I'd rather look somewhere else. Carlos, even better. Even better. If it does not look clean, leave it alone. If it does not look clean for you, leave it alone. Because it's all about where can you get in and where can you get out. If it's too tight, your risk to reward is not worth it. Okay? If you get in somewhere here, where you saw that earlier there were buyers there also, then you can at least ride it to where the sellers last were. Okay? But over here, that range is getting, in the current market, the range is getting tighter and tighter and tighter, which means even though it may be in an uptrend, it just may not suit your trading criteria. Okay? And nobody's going to scalp the daily. It's not scalping. All right. So in this situation, the markets have come down drastically, and I usually look at the markets in terms of weakness. Usually 2.5 legs or 3 legs. Okay. This is something that we'll be going over a little bit extensively on next month's exclusive 3-hour or 2-hour webinar that we're doing. No, I do not scalp weekly. And it is my personal opinion that scalping on currencies is very, very, very dangerous. Okay, you go in below 5 minutes to trade currencies, you're not going to make it alive. So. Okay, so my personal preference, if you guys ask me, hourly and above. Hourly and above. Hourly is as far as I want to go and mess with. Okay, so Euro New Zealand. Let's take a look at Euro New Zealand. That was one of the pairs. Okay, we have a nice movement here. Take a look at this now. Buyers. Strong move up. Retrace. Okay, equilibrium, ranging, right? Okay, buyers giving away what sellers did, sellers giving away what buyers did. Okay? Up and down. We're just having these move down, then it's going to move up, then a full retrace. Move up, and a full retrace. That's what a range is. You're having full retracements. Okay? But now, we've had a move beyond it. Okay? Now, this move beyond it, don't look at this as a breakout, but rather look at it like this. Okay? Look at it like that and understand, okay, so what do we have? If I were to start plotting my circles, well, I have a circle now here. I have a circle on top, okay, extreme areas, right? And I have a circle down here. So, for me to see that the trend wants to go down, it's starting to give me initiation that the sellers are starting to show that they're in control. So what I need to know is a failed rejection from the top. Somewhere in this area, I want to see the buyers unable to make it. Okay? That's a good sign for me. Following that is I need another circle to start showing up lower for a lower low. That gives me a confirmation that, hey, we're turning around. Okay? So this one is already starting a move. And if you have a correlating pair like Euro Aussie dollar, you might want to check that also. Okay? Let's check Euro Aussie dollar. See if they're writing the same thing. Correlating pairs usually work really, really well. Okay? There we go. Also, same thing according to this thing. Same from here to here. Showing some initiation. But I have a circle here as well. Extreme areas, right? But I need to see that I need to see a channel come down like that. So I can have a downward channel as well. Okay, until I don't get that channel, I don't know. So in terms of channel, if you're looking for support and resistance or supply and demand, there's nothing here. Okay? We're going to have to go down to a smaller time frame to pull out these nitty-gritty things inside, or up here only. And if it's all the way up there, we're getting too close to retracing 90% again. Okay, you guys get what I'm trying to say? It all depends on the degree of retracement. Okay. So Navin, you would not trade until you get the lower circle. Would you wait? Yeah, absolutely. I would wait. I really like the market to usually tell me what it's doing before I get in, because that increases my reward. Because I know I'm going to be riding the market then. See, this is what happens. Let me draw it on plain sight for you guys. Okay, big move down, and then we have this large retracement up. It that move does a small retracement. Okay, up until this point, do you think the upward retracement is done? Okay, just everyone think about this. Do you think the upward movement is done? No. And why is that? See, most people look at this and they say, 38% and it's going down. Hit that sell button. We're picking up a Ferrari tomorrow. It's not happening. It's not happening. Look at the degree of pullback for this retracement of this upward strong move that came in. There's gonna be a next leg up. And if your next leg up is weaker than the first leg up, you can start to see that it's starting to die as it's going up. It's starting to die. Then what will happen is your pullbacks are going to get stronger. That's when you start to see that, now I can get in. Because that's where it's going to go from. Otherwise, what will happen, you may be right at the 38%, but you're going to have to sit through all of this mess. And while you sit through all of this mess, I can pretty much assure you 95% of the time the psychology will kick in and say, close the trade. It's not worth it. It's going the other way. And you'll end up with a loss. So the best way is to wait it out, be patient about it, find out if the trend is dying. But all of this only makes sense if your bigger picture tells you that you're in a retracement. Okay. So looking at the bigger picture tells you what needs to be done, and once we see a retracement coming in, we need to see that retracement starting to die. Okay, and that's when we are able to get in. Okay. All right, so let me get rid of all this stuff on the screen. Oops. Okay, can't do it from here. Okay. Let's see. Let's see if there's anything interesting. Let me show you something that we took at on Forex Watchers conference we were talking about. Let me clean this up so I can show you. Okay. When you look at this on the daily, right? Upward movement, strong upward movement, and the market's coming in. Okay, for me, I'm looking at this as a daily chart right now. Okay, how much has it retraced? If I were to put my line in here, how much has it retraced? What would you guys say for retracements on this? MBA? No, don't look at this big move on here. It's like 15%, right? Yeah, of this strong move upward that it did. Okay, so it's done 15% of this whole thing, because this big move right here that you're focusing on, that's done. It's done its retracement, and it's gone down to its recent lows. Okay, so when we see this move here, and we see, okay, 15% pullback is done, but how did it do that? Did it do it in a singular move? Or were we able to see the trend was dying? So when we see this, we see, look at this red movement down. And then you have that green candle to separate it. Okay, we got leg one down coming in. And then the next red candle, it's even weaker. And then we see, okay, well, there's a support resistance area here. Supply and demand traders like, okay, there's a supply and demand here. Okay, we got all this information just piling up here. Okay, fair enough. Let's take a look at this into our second time frame that we like, which is one time frame lower. Okay, and let's do that. Okay, when we're looking at this, how do we see this? We see the market move down, singular move. Okay, and then it retraces for approximately 38%, and then it does a secondary move. It gets even weaker. Okay, is the second move bigger than the first move? No. It's telling you the buyers have money. Forget 38%, 60%, all of that nonsense. It's showing you that the buyers are coming in with some money. What do you see after that? What kind of retracement is happening after that? Buyers take over. The buyers literally take over. Once the buyers take over, that is the retracement I'm hunting. Supply and demand, support, resistance, whatever you call this. This is the area you want to be getting in. Not down here where you have to sit through this nonsense and most likely be stopped out. Is here. When you can actually hit the buy button, keep your stops as low as 20 pips and ride that sucker all the way up. Does that make sense? But you must see this in sequence coming in. Okay? You must see the weakness coming in. If the weakness is not there, it's going to get tough. Okay? In terms of pressure up, I wouldn't say this is going to continue too long because of how far it's already gone up. Okay, I was looking at this for it going further higher too, but I had to discuss this with a friend of mine who's also trading professionally for himself, and he even looks at this as it's too high up, so I'm not going to risk going against that. Okay, so we have a few minutes left. Any questions? Any questions? Let's go over some questions. Okay, you say that the second red is weaker, but it didn't make lower low. Yeah, that's perfectly fine. But how much further does it go? That's what matters, right? Has any significance a gap for you? Yes, I always look at gaps trying to be closed once a gap happens. That's as far as I take it. I do see when a gap happens, that means there's strength in there. And I look at that as just a strong big candle like this. So a gap just tells you there's no candle, but I just look at it as one singular big candle like that. So that's how I treat a gap. Okay, you're welcome. Do you consider the candlestick of the larger time frame? Of course, of course. This whole view of me accepting to buy where we did draw the circle was only because the daily chart says there was a support resistance area right there. And we saw the trend dying out for retracement. If the daily didn't show me there's something there, I would not be able to take that buy. Okay. All right. Is it best to do this in correlation daily chart? I mean, yes. Absolutely, because sometimes you'll see this. It happens together hand in hand with Euro USD. Take a look. Take a look at Euro USD. Let's go down to the 240, and I'll show you. 240 is 4 hours. Okay, take a look at this. Move down, retracement, 60% retracement. Okay, second move down. Did it make a lower low on this one? Nope. Okay, and that's when the buyers show you that they come into control. So the trend is dying. The trend is dying, this whole movement that we're having. You're very welcome. You're very welcome. What is the difference between support resistance and supply and demand? You talk about support resistance zones. Are they the same as supply and demand zones? No, they're different. I've come into supply and demand not too long ago by Mr. Sam Seiden, and that's I do realize that it's a different way people look at an area where the markets launch from. Okay, I always look at it as where the market launches from, but he explains it in a way that people do understand, and that's what I've been using as well to have recognition between people. So, does a significance drop on higher time frame influence how we should look at lower time frame charts? Does a significant drop on a higher time frame influence how we should look at lower time frame charts? Yeah, absolutely. Because then, if you have, for example, let me give you an example here. Okay, this is the higher time frame, right? Let's say it's gone all the way this high, this big move, and then it retraces down till here. Okay, what percentage would you call that? A retrace down to this level. I mean, let's make it even lower. How about that? Okay, 80%, right? Very good. So, as the markets are starting to go back up, Okay. As the market starts to go back up, let's do this. As it starts to go back up on a smaller time frame, it'll look like you're in an uptrend. Because that's all you will see. You'll only see this little leg up. But the reality is, sooner or later, somebody's going to smash it down. Because you see the sellers coming in. Okay, so even if you take a trade for a buy, how much further do you think that buy will go? It's going to struggle. Okay, and this is very important for those traders, those traders who like to hit the button. They basically close their profits quickly and they let their losses run because hoping that there's going to be a home run. Or when the profit comes along, they hold it even more because they're like, well, I did make 20 pips. Maybe it's going to go more. That maybe is what kills them. Okay, it's that last minute, it's the last minute changing of your mind thinking that, okay, so all the analysis that was done up to taking the trade, goes to the trash can. Okay? So understand the strength to understand market direction. Yeah, no wishful thinking. As very, very well said, Samara. No wishful thinking in Forex. Absolutely. Okay, Drew, so you use both supply and demand, support, resistance. Can you please explain the difference? Support and resistance can go through levels. The way I look at them, I use levels like this as well, that what they go through it. Supply and demand doesn't go through candles. Let's just put it that way. Okay, but I use a little bit of both just to understand market significance. That's okay. Okay. All right, guys. So that's it for today. We do have 2 more seats remaining at forexwatchers.com for our conference room. And do be on a lookout for next month. We're probably going to have a 2 or 3 hour exclusive webinar on fxstreet.com. So don't miss that out as well. Keep in touch with that. So thanks a lot, guys, for attending. And thank you, FX Street, for having me here again.